Hello dear students, welcome to Devika's Commerce and Management Academy. New chapter, many people are waiting for this chapter, self-balancing system. Self-balancing system. Not so tough. Many people are asking, madam, how to prepare, what to do. We are confused. There is no confusion. Damn easy chapter this is. If you know how to write journal entries, ledgers, this is quite easy. Now let's enter into the self-balancing system. Before going to that, I request you all, please do support our channel, because each and every lecture is not so easily preparing by me, taking a lot of pain and time, energy, all these things just for you all at the rate free of cost. Please remember this and support our channel by sharing these videos with many students, maybe your friends, colleagues, or juniors or seniors, whoever it may be. Please support. Now coming to this self-balancing system. You know that in olden days, when organizations are small, they never used to maintain a very big accounting system. Simply they used to appoint a clerk. Say clerk is Mr. X. Mr. X is appointed and he has to maintain all the accounts. What he used to do, you know, simply opening ledgers. Ledgers, different types of ledgers he used to open, and whenever he finds any transaction, new transaction occurred in the business, that he used to enter in that. So that was the system in olden days. Now the same system we are converting into self-balancing system. How? I am going to explain it. Before going to that, just remember this concept, the same system we are applying it. Now before going to that, let me tell you what is self-balancing system. In simple words, you can say, under this system, ledgers are made self-balancing by opening adjustments accounts. Each and every ledgers are made by self-balancing. Itself only we are balancing there itself only, self-balancing by opening adjustments accounts. We'll be opening adjustments accounts and we are balancing itself over there only. Okay. Now why this self-balancing system means, you know that there are big organizations nowadays, lot of transactions will be occurring. All these transactions, if you write it in journal entries and transferring that into the ledgers and then trial balance, all these things, it will take a very lengthy process. When we want in short, gun short, we want some information, quick information we want, means self-balancing system is the best way. What we do in self-balancing system, you know, all the credit transactions, especially credit sales, credit purchases related to this credit transactions, will be opening separate ledgers. You know that sales, credit sales means you'll find debtors. Whose debtors? When I am selling goods on a credit basis. Credit sales means I am selling the goods on credit basis. To whom I am selling? Suppose say maybe A, B, C. These A, B, C are, we call them as debtors. These are debtors. These people are debtors, right? So in self-balancing system, you must have an understanding. Credit sales are related with the debtors. When you find credit sales, then only debtors. Cash sales, no. Cash sales means no debtors, right? In the same way, when I am purchasing goods on credit basis, means credit purchases. When I am purchasing goods on credit basis, from whom I am purchasing it. So those people we call them as creditors. Say XYZ, purchasing goods from XYZ on credit basis. Then XYZ are called as creditors. Right? Okay. So this concept you must remember. In this method, self-balancing method, each and every transaction is double entry system we are following. You know double entry system? For every debit transaction, there will be credit transaction. Debit and credit together in every transaction, that is, we call it as a double entry system. Say for example, did you follow this concept? Okay. Say for example, I have purchased goods from Mr. or otherwise sold, I say, sold goods to Milind. Milind worth of 1000 rupees. This is one transaction. Selling goods to Milind. Who is the receiver here? Milind. Debit the receiver. Means Milind we are going to debit. Credit side what do you write? Sales. Right? So the entry is here Milind's account debtor. Account debtor to sales account. 1000. So this is the journal entry we'll write, right? Do you remember journal entries? So the same kind of transactions we are going to take place. So sold goods to Milind. Milind is the receiver, debit the receiver, and credit what goes out. Sales are going out. Okay. So Milind's account debtor to sales account is the entry. In the same way, suppose say purchased from Raju. Okay. Purchased goods from Raju, say 2000 rupees. When we are purchasing goods, you will write purchases account debtor to Raju. Why Raju is crediting? Because credit from him we are taking the goods on credit basis, right? Here Milind was getting goods. Okay. When we are selling, Milind was getting. Now here purchased goods, no, Raju is giving us. Credit the giver. Raju is giving us. So that is why Raju we are crediting. So entry comes purchases account debtor or goods account. Anything you can take. Generally I prefer purchases account debtor to Raju's account. So 2000 rupees. Now if you observe these two entries, what did you understand? Sales or purchases, both are credit transactions, important thing. Cash transactions we are not going to consider into the self-balancing system, only credit transactions only. Okay. Now another important thing is that debit credit you are finding. Double entry system we are following. That's it. Now here we are going to open different types of accounts. What types of accounts I am going to explain it. Up to here you have followed right now. Okay. Now coming to the ledgers. So you are understood this point. Under the system, ledgers are made self-balancing by opening adjustments account. What are adjustments account? In this table we are going to discuss. Why do we prepare self-balancing system? Where the transactions are a lot and it's difficult to maintain all these transactions in ledgers, then we'll be preparing self-balancing system. Separate accounts will be opened so that we can get the information quickly, no delay at all. That is the main reason for preparing the self-balancing system. We are following the double entry system. Now coming to the ledgers in self-balancing system. You know that ledgers are divided into three parts. In self-balancing system, not general. Okay. In self-balancing system, ledgers are divided into mainly three parts. First one is general ledgers, sales ledgers and purchase ledgers. General ledgers, under general ledgers, what accounts will prepare? Will prepare two accounts. Under general ledger, we will be preparing two accounts. One is sales ledger adjustment account. Sales, talk along with me so it will be easy for you to get the terminology, right? So under general ledger, sales ledger adjustment account will prepare first one. Second one is purchase ledger adjustment account in general account. Okay, general ledger we are preparing these two. And when it comes to sales ledger, we prepare only one account, that is general ledger adjustment account. And in the same way purchase ledger also will be preparing general ledger adjustment account. Hope you are getting the clarity. General ledger we are preparing sales ledger adjustment account, purchase ledger adjustment account. Sales, purchases, both credit transactions we are going to take separately. Credit sales in the sales ledger adjustment account, credit purchases, purchase ledger adjustment account. When we take a sales ledger, so there we are opening only one account, general ledger adjustment account. In the same way, purchase ledger also, general ledger adjustment account. This table you need to understand. In the coming classes, we'll work out the problems. Now, advantages. What is the need of preparing this self-balancing system? What are the advantages? What are the benefits we have? 6 benefits you can say in quick. The first one is that speedy detection of errors. Self-balancing system, we are preparing all the ledgers separately, ledgers and accounts separately we are preparing. Easily we can locate any kind of problems are there, any kind of errors. If you find any errors, speedy detection of these errors. Easily you can find out the errors. And in the same way, balancing is done quickly. Separately we are opening accounts now. Separate ledgers, separate accounts we are opening. Balancing is also easy. Need not to depend on any other accounts. So balancing can be done quickly without any delay. Next one, it reduces the frauds. Do you know the differences between errors and frauds? Errors means by mistake, unknowingly, without knowledge, by mistake, errors. Frauds, intentionally, deliberately to deceive or to get the benefit. So those kind of things we call it as a frauds. Easily you can reduce this kind of frauds. You can find out such kind of problems because entries are very clear. So we can reduce the frauds also. And another important thing is that preparation of final accounts is easy. You can prepare final accounts very easily because all the ledgers are very clear. From the ledgers, take out the entries and write it in the final accounts and prepare it easily. So there is no delay at all. Easily you can prepare the final accounts. Next one, useful where large number of debtors and creditors are there. In the introduction itself only I told you, when you find large number of debtors, large number of creditors, better to go for self-balancing system. In self-balancing system, what we are preparing separately, ledgers we are opening, right? So you will get more clarity. That is the benefit. And facilitates division of work among employees. The work is divided between the employees. Like you prepare self-balancing system. In self-balancing we are having debtors account and also creditors account, debtors adjustment account, creditors adjustment account or general adjustment account. Separately you take the responsibility. Those people are responsible only up to there only. So we are making them responsible and work is divided among the employees. When we divide the work, what happens, you know? Work will be easy, division of work will be there, and time will be saving, energy will be saving, and money also we are saving in the form of salaries. That is also we are going to save. So like these are the 6 advantages. Take a screenshot or note down. Hope you understood. This is only introduction. Coming class will work out problems. Problems are damn easy. Need not to worry at all. Just stay connected. Next class will have practicals. By the way, did you check the playlist? There are many subjects which already prepared. Okay, many subjects, whatever may be your course, whether you are doing BCom, BBA, MBA, MCA, or any kind of even BTech course also, professional courses like CA, CS, CMA, and 11th, 12th commerce. For everyone, something is available in our channel. Please check out the playlist, use it and forward these videos. Practice well. Good luck.